Hey, this is Niall from learntotradethemarket.com. In this video I'm going to talk about my favorite setup called the FAKEY. I did a video on it a couple of weeks back. I had a few people email me and they weren't really confident in the setup the way that I explained it the first time around. So I'm just going to have a look at it again and explain it for those that weren't too sure. Pardon me, if you've still got questions, I want you to post in the forum any uncertainties, and I'm happy to recreate another video on another pair if you still don't understand the setup. Alright, so we've had another FAKEY setup on the sterling US this week. Now, although this is in hindsight, you've got to bear in mind that I really can't give specific live trading advice, so I have to look back in the past and show you something that's happened, and usually that's the best way because you'll be able to use it in your own time and learn the best way to trade the setups with your size account and your personality. So let's have a look at the sterling US. Okay, we're going to be paying attention to all the price data that is to the left of this signal bar here. We want to look to the left. Okay, so let's assume we didn't know that this bar was forming. The only bar that we knew that existed at the time was this inside, almost inside bar. I think it was an inside bar. Hello, that? Yes, it was. So this bar here was the Tuesday bar. That was inside the Sunday-Monday bar. Okay, and then what actually looked to have happened, we had a resistance region here. I'll just put that on so everyone can see. If we just draw a line through here. So the market was encountering selling pressure, okay? And what happens when the market tests a major sell level like that? It'll consolidate. It's hit there, it's consolidated, we had an inside formation, and then what's actually happened, the market broke lower. Okay, so everyone's getting short and they're believing the trend is over and it's looking to roll back to 196.94. So we get a lot of short sellers that move in off this inside bar break. And what happened on that particular day was it hit the 21-day average and started to push higher. So the buyers started to move in at lower prices. And then they pushed it above the session high. Now, whenever you get an inside break that moves down and then moves back above the session high for the day, I call that a FAKEY setup. And it's an automatic signal. You just take the trade, and you can implement your own stop management, own profit target management. But whatever the case, it's a bullish signal in the case of it moving down first and then back up, and vice versa. It's a bearish signal if it moves up off an inside break and then down. So if we narrow down to a smaller chart, let's say a 60-minute, I'll take you to that exact day.